Good morning and welcome to today's Crypto News Podcast. We've got a packed episode lined out for you today, focusing on the latest developments in the world of cryptocurrency and blockchain. Our top stories include Revolut's efforts to strengthen crypto fraud protections, the CoinDesk 20 performance update, and a closer look at what's driving market trends.
Let's dive straight into the biggest market-moving story of the day. Revolut's plan to extend its fraud prevention product, Revolut Pay, to crypto customers from the start of 2025. This move is expected to bring added security and risk scores to the crypto space. Can you walk us through what this means for Revolut's crypto customers?
That's right. Revolut Pay will include features such as Know Your Customer KYC, name matching, fraud warning screens, proof of crypto delivery, and the ability for crypto merchants to receive transaction risk scores. This enhanced due diligence API will be rolled out to crypto customers next year, and it's likely to have a significant impact on the way crypto transactions are processed and secured.
So this is a great development for the crypto space, which has often been criticized for its lack of transparency and security. By introducing these measures, Revolut is taking a proactive step towards preventing fraud and protecting its customers. What do you think this says about the current state of the crypto industry?
It suggests that the industry is maturing and taking steps to address some of the concerns that have held it back in the past. As more mainstream players like Revolut enter the crypto space, we can expect to see greater emphasis on security, compliance, and regulation. This in turn could lead to increased adoption and confidence in cryptocurrency.
Yeah, that's a great point. Now, let's switch gears and take a look at the CoinDesk 20 performance update. The index took a hit over the weekend, with HBAR falling 11.3% and Internet Computer declining 7.1%. What's behind these losses?
While the CoinDesk 20 is currently trading at 3,805.48, down 1.7% since Friday. Only two of the 20 assets are trading higher, with Link up 5.2% and BTC up 2.2%. It's worth noting that HBAR and ICP are among the top underperformers, which could be a sign of a larger trend. We'll be exploring this in more detail later in the episode.
It's interesting to see how the market is reacting to these losses. We've seen some assets like Link and BTC bucking the trend and performing well. What do you think is driving this divergence?
That's a great question. We'll be examining the factors behind this divergence and what it might mean for the broader market. We'll also be taking a closer look at the CoinDesk 20 index and what it can tell us about the current state of the crypto market. Stay tuned for more on that.
And that's just the tip of the iceberg. We've got a lot more to cover in today's episode, including the latest developments in blockchain technology and the regulatory landscape. It's shaping up to be a fascinating conversation, so be sure to stick around.
Building on what we discussed in the previous segment about regulatory frameworks and their impact on the crypto market, it's interesting to consider how a change in leadership can affect the industry. There's been a lot of speculation about how the new administration in the U.S. will approach crypto regulation.
That's right. In fact, there's been an open letter to President-elect Trump suggesting that a simple executive order on his first day in office could pave the way for a crypto resurgence in the U.S. The author of the letter, who's the co-head of a major law firm's digital assets practice, is calling for reforms to the way the SEC approaches crypto market regulation.
And it's not surprising that there's a sense of urgency around this. The SEC has been criticized for its lack of clarity on crypto regulations, and many believe that this has stifled innovation in the U.S. By issuing an executive order, Trump could potentially set the tone for a more supportive regulatory environment.
So of course this is all speculative at this point, and it's unclear whether Trump will take any action on crypto regulation. But it's interesting to consider the potential implications of such a move. If the U.S. were to adopt a more favorable regulatory approach, it could have a significant impact on the global crypto market.
Speaking of market developments, there's been some news from FTX. The company has announced that it will begin repaying customers in early 2025 using Kraken and BitGo to facilitate the process.
This is a significant development given the scale of FTX's collapse. The company's debtors have announced that the effective date for its plan of reorganization has been set for January 3, 2025. Which is also the initial distribution record date for holders of allowed claims.
It's worth noting that this is a complex process, and there are likely to be many hurdles to overcome before customers are fully repaid. However, it's a positive step forward, and it suggests that FTX is committed to making things right with its customers.
This news also highlights the importance of transparency and communication in the crypto industry. FTX's collapse was a major blow to the market, but the company's efforts to repay customers and provide updates on the process can help to rebuild trust.
Absolutely. Transparency and communication are essential for building trust in any industry, and crypto is no exception. As we move forward, it will be interesting to see how other companies in the space respond to the challenges and opportunities that arise.
And as we continue to follow these developments, we'll be keeping a close eye on regulatory changes and their impact on the market. Whether it's through executive orders or other means, it's clear that the regulatory environment will play a major role in shaping the future of crypto.
We'll be sure to keep you updated on any further developments. In the meantime, it's clear that the crypto industry is at a critical juncture, with many factors at play that will determine its future trajectory.
So we were just discussing the impact of global economic trends on the crypto market, and it seems like investors are getting more optimistic about Bitcoin and Ethereum. I mean, have you seen the latest numbers?
I haven't. It's astonishing. Bitcoin just hit a record price, peaking at over $107,822 on Monday, and Ethereum isn't far behind, reaching a 3-year high. It looks like those who were betting against price gains for these two cryptocurrencies are facing significant losses.
That's right. With short liquidations piling up, it's clear that the market is shifting in favor of the bulls. And this surge isn't just a one-day fluke. Bitcoin has been consistently nudging higher since breaking its previous record on Sunday.
This momentum is likely to continue, especially given the increasing adoption of cryptocurrencies in various sectors. We've been discussing the growing intersection of art, fashion, and entertainment with crypto, and it's clear that this trend is here to stay.
Building on what we discussed earlier, it's interesting to see how different regions are responding to the growth of the crypto market. Take British Columbia, for example. Despite Vancouver's efforts to become a Bitcoin feminist city, the province is maintaining its ban on new Bitcoin mining connections until December 2025.
And that's a significant contrast to Vancouver's pro-crypto stance. The city council has been exploring ways to make Vancouver a hub for Bitcoin adoption, but the provincial government is prioritizing clean energy initiatives over crypto mining.
It's not surprising given the environmental concerns surrounding crypto mining. However, this ban has been challenged in court and upheld, which suggests that the province is committed to its stance.
Speaking of environmental concerns, it's worth noting that the crypto industry is making efforts to become more sustainable. We've seen the rise of eco-friendly mining solutions and a growing focus on renewable energy sources.
That's true, and it's likely that we'll see more innovation in this area as the industry continues to evolve. For now, it's clear that the crypto market is on the upswing, and investors are taking notice.
With Bitcoin and Ethereum leading the charge, it's going to be interesting to see how the rest of the market responds. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available.
We've been discussing the blurred lines between securities and digital collectibles in the crypto space, and it seems like the SEC is taking a closer look at NFT projects that may be crossing that line.
That's right, and the latest project to receive a Wells notice from the SEC is CyberKongz. According to a statement from the project, the SEC's Division of Enforcement is taking issue with the use of a token, specifically an ERC20 token, in conjunction with a blockchain game without registering it as a security.
This raises some interesting questions about the future of NFT gaming projects and how they'll need to navigate these regulatory hurdles. It's not the first time we've seen the SEC take action against an NFT project, but it's a clear indication that they're taking a closer look at this space.
Absolutely, and it's worth noting that CyberKongz is not alone in this. We've seen other projects like Axie Infinity face similar scrutiny from regulators. It's a reminder that the crypto space is still largely uncharted territory from a regulatory perspective, and projects need to be prepared to adapt to changing guidelines.
Building on what we discussed earlier about the current state of the market, it's interesting to see how this regulatory uncertainty might impact investor sentiment. Speaking of which, I saw an interesting article about Bitcoin options data that suggests traders are no longer chasing record price rallies like they were before.
That's right, and it's a fascinating insight into the current market dynamics. According to the data, short-duration options are showing cautious sentiment even as Bitcoin continues to reach new lifetime highs. This suggests that traders are taking a more measured approach to their investments, rather than jumping in with both feet.
It's also worth noting that the latest flows are leaning slightly bearish, which could be a response to the expected hawkish hike from the Fed. This could be a sign that traders are preparing for a potential correction in the market, rather than expecting a continued price surge.
Exactly. And it's a reminder that the crypto market is always subject to a range of external factors, from regulatory changes to macroeconomic trends. As we move forward, it'll be interesting to see how traders continue to adapt to these changing conditions and how that impacts the overall market sentiment.
While it's clear that there's still a lot of uncertainty in the air, but one thing is certain, the crypto space is never boring. We'll continue to keep a close eye on these developments and bring you the latest updates as more information becomes available.
And that's all for now. We'll be back with more news and analysis after the break.
As we wrap up today's episode, I want to circle back to the mysterious drone sightings that have been making headlines. We touched on it briefly earlier, but I think it's worth diving deeper into some of the prominent theories that are emerging.
Yes, it's getting increasingly bizarre. I mean, you have people like Joe Rogan tweeting about it, and now there are all these conspiracy theories popping up. I saw one that caught my attention, the missing nukes/dirty bomb sweep theory. What's your take on that?
Well, it's definitely an alarming theory, but I think we need to take it with a grain of salt. I mean, there's no concrete evidence to support it, and it's mostly speculation at this point. But what's interesting is how it's getting traction on social media, and people are genuinely concerned.
That's true. And then you have the PSYOP/government conspiracy theory, which suggests that these drones are actually advanced technology being tested by the government. I'm not sure what to make of that one, but it's definitely an intriguing idea.
Yeah, it's like something out of a sci-fi movie, but what's worth noting is that none of these theories have been proven, and we're still in the dark about what's really going on. Maybe we'll get some answers soon, but until then, it's all speculation.
Moving on to something a bit more lighthearted, we also talked about TapSwap, the new Telegram game that's building on the open network, and STIN is reportedly drawn in over 60 million users, which is impressive. What do you think about the game and its potential for crypto earnings?
So I think it's an interesting concept, and it's great to see more games like this emerging. The idea of earning crypto while playing is definitely appealing, and I can see why it's gaining traction. But what's worth noting is that the token launch and airdrop details are still a bit unclear, so we'll have to keep an eye on that.
Absolutely. And speaking of keeping an eye on things, what are your final thoughts on the market outlook for the day? Any key takeaways from the stories we covered?
Well, I think the drone sightings are definitely something to keep an eye on, even if it's just for the entertainment value. But in all seriousness, it's a reminder that there are always unknowns in the market, and we need to be prepared for anything. As for TapSwap, it's an interesting development in the gaming space, and we'll have to see how it plays out.
Agreed. And finally, I think it's worth reiterating that the crypto market is always volatile and we need to stay vigilant. Keep an eye on your portfolios and don't be afraid to adjust your strategies as needed.
That's all for today, folks. Thanks for tuning in, and we'll catch you on the flip side.
Until next time, stay crypto savvy.